are the reason for all of your success, and you are the reason for all of your failure. Full stop. How can you lead a team if you can't lead yourself? If your life depended on whatever it is that you're doing today, right? Would you go about it differently? Did you leave it all out there? Because anything worth doing is worth doing right.
I've got this right. I'm maybe just doing it wrong. That's the bigger, greater definition of focus for me. If you're the most determined person, but you have no idea what you're doing, hard to succeed. If you're the most focused, but you give up easily, what's the point? So to me, focus includes getting rid of the noise.
Good morning. Big day. PCE and claims here in 4 minutes. PCE going to be a very interesting read. We are expecting, so kind of breakdown in the lead up of this. We're expecting continuing claims to be at 1,800. We're expecting, or 1.8 as it were. We're expecting jobless claims to be at 225, which would be down 1,000 from a week ago. We're expecting the monthly headline PCE to come in at a half, up a tenth. The annual to be at 4.1, which would be up 0.3. The quarterly to be 4.5, which would be up 1.6. And the core monthly to be at 0.3, which would be 0.1. In theory, we're really focused on the core or even super core. Don't really know that we should care about GDP. I mean, I'm sure there'll be some reaction to it. It's the third revision, right? So, at this point, one could argue that this is actually the most important of the numbers, or I should say the third iteration, the second revision. It's the most important of the releases in that it's probably the most accurate, right? But it's, gosh, we are 5 days away from completing Q2. And we're still talking about Q1, right? And so, it's one of those where this is yesterday's news, but we've sort of been trading yesterday's news for 2.5 months, and perhaps albeit on an unreliable basis. Best thing that can happen here, regardless of any other number we get, is the core to print at 0.2 or better or something like that, right? Really help drive this narrative of this inflation being exclusively oil-based, Iran-based, and therefore transitory. Nice little pop yesterday, and really somewhat unexpected in that, I think that it was in some regards maybe just a touch overdone. Listen, you have month end, you have quarter end, you have halfway through the year. You have the anticipation of light liquidity. We got to 4.4. We might have even just touched. Yeah, we touched just below 440 on tens there for a minute. Kind of exactly what I had said it was. 6.25 and above really didn't move. If you look at where we were at, and we got 1 minute to post here. If you look at where we were at 838, 102.3 on sixes. If you look at where we are now, and I don't know that this is a tradable level, at least on my screen, we're at 102.2 on sixes. Really didn't move. But the Downing coupon, where I suggested maybe you take a little bit more of a chance, 98.14 versus 98.26 on fives. So let's see what this data does. What I'm going to say is, if we hold at near the 99 handle, first move looks red, so I don't know how good it is. Today is an absolute lock day down in coupon. All right, here we go. Claims 215, not good for bonds. Continuing 1821, good for bonds. GDP sales came in at 1.9. We expected 1.5, not good for bonds. Headline monthly PCE 0.4, maybe good for bonds. In a vacuum, very good. Annual on the screws, durables on the screws at -4.5. CapEx, big beat, 1.6 to 0.6. Quarterly PCE beat by a tenth, not disastrous. Core PCE on the screws, big beat in GDP, 1.6 to 2.1. Core annual 3.4 on the screws. Core monthly 0.3 on the screws. Last month revised up 0.2 to 0.3. Oh, how do you digest this? Short end of the curve likes it. We're green on treasuries. Seth, what are you seeing on MBS? I'm kind of seeing nothing on my screen. Almost no movement to before the number on MBS. Boy, this is going to be one, and I'm going to give it a moment here to digest and go out to the web and see if we can get some better numbers and or some insight. I want to say that this is more of a sigh of relief than it is like a good number. I really that one sort of better than expected 0.4 versus 0.5 on the monthly headline. I think we'd have been much better off to see the core print at 0.2, and argument's sake, even the headline print at 0.6. I'm not certain that I'm convinced of that, but if we were going to have an on the screws and a better than expected, we'd have rather it been in the core. I think the good news about this core number, right, is that gives us an annualized rate of 3.6 just exclusively on this monthly. And while well above the Fed target of 2, and we're going to talk about oil prices here in a minute, along the lines of what I've been saying about oil, right? I am inclined to look at, and when I say I am, that doesn't matter, right? The Fed has to be inclined to look at it this way. But I say this because I suspect, and some of the early language, Seth saying that it's holding pretty steady, we're pretty flat across the board. So on that basis, right, while we've dodged a bullet, it wasn't a great number. I would think that you're going to want to be full on lock across the stack today, but we'll more on that in a minute. But based on some of the things that the Fed has said, why I think I like this 3.6 core number is, one, they've talked about looking at inflation a little bit of a different way. They've talked about perhaps disconnecting some of the old sensibilities from monetary policy. And I go back to what I said about oil. If oil touches a 60 handle or better, or even stays in the 70s before we've fully opened up the strait and or concluded this conflict, then what the heck is it going to be when things get back to normal? Are we looking at a 50 handle? And if we are, what does that do to inflation expectations? And I would venture to guess, I mean, and common sense would tell you that it would knock the heck out of it. Well, if here we are, and keep in mind, this is a May number. If here we are, we're printing at 3.6, right, in adverse conditions. What does that print look like when adverse conditions go away? Not saying that the print is 0.5, but what I am saying is, maybe we can extrapolate to 2.2, 2.4, something along those lines, whereby while not at the 2, this new Fed wouldn't view that as restrictive territory. Maybe we back off the 3 hike assumption. I go back to, and I felt like the indication was more of a one and done. If our worst case scenario is one and done, if that's our base case, where does that take tens and therefore MBS? Well, a heck of a lot closer to where we closed yesterday at 43944. But I kind of go back to that 428, 43 range. I think that's a pretty comfortable number. I mean, keep in mind, we were at 39X, like 396 a couple months ago, right? So let's talk about the market here, the greater market. First of all, overnight, Nikkei up almost 5%. Generally, stocks up across the board overnight. Here on shore, we're indicating up. NASDAQ leading the charge at up 2. Everything else is more flattish to maybe up a half. VIX down 3%. We continue to bounce around there. Dollar up against most currency. But to me, here's the story. Silver down another 1.5. That seems to me, and maybe there was a big update, but silver's been getting crushed. Crude oil 69.8 as we sit here. So has broken through 70, and we do have a 60 handle on oil. It would be disappointing if the market doesn't pay attention to that. Brent at 73.4. Most commodities down. Natural gas up and copper up. Bitcoin down again, 61. And Bitcoin, I guess, has been, generally speaking, a little bit cranky here since when it's 625 highs, I guess. Is that kind of where we were? Let me do, oh no, that's a 24-hour chart. Yeah, if I look at a 1-month chart, on 525, we were at almost 78,000. Here we are at 61. And if I look at a 6-month chart, we got into a 50 handle. So I think was the low 59. I mean, I don't know. This is not a Bitcoin thing, but I think the low was around 59. So we're getting pretty close. I mean, back in January, we were at 97,000. So I talk about Bitcoin because, I don't know, for me, it seems to be a highly speculative investment vehicle. I don't know that this is proven out to be 100% true, and I certainly believe that it's changed as time has passed. But I think that you have far more casual investors in Bitcoin than you do in, say, IBM, right? And so, therefore, when we talk about the greater economy and when we talk about the disconnection in some of these numbers, and I think some of these real estate numbers, and I know some of the numbers that printed yesterday, and let's take a quick look at that. So this was new home sales came in at 580,000. Missed from 640, down from 622, but revised up. And I know that there was some consternation about that. I think Russell Mack had a pretty good post on that. The folks that are thinking this is 2008, and while supply has caught up some, it really hasn't. And so, hey, buddy, what's up? I'm working on that answer for you about July 30th, by the way. To me, and this is high, back of the napkin stuff, right? And I think sometimes, though, you've got to talk in broad strokes. Part of the disconnect in our economy, right, is who has the money, who's spending the money. And what we know is that while wages are up, real wages aren't necessarily up. And the greater economy is driven by small business and wage earners and consumer spending, right? And we know that those folks, while some argue, and I've argued that a good chunk of those folks are in recession and have been, I could certainly say that we could all likely agree that those folks aren't doing as well. This so-called wealth gap is wider than ever. And so the folks that have the money to spend, not generally speaking on earned income, it's on real estate speculation, it's on stock speculation, it's on Bitcoin speculation. And that spending tends, particularly on the fringe, tends to be incredibly volatile. So why I keep my eye on Bitcoin is the moment, and I apologize for you, any Bitcoin millionaires that are out there, but the moment that we start getting margin calls, the moment that we start to get Lamborghinis repossessed, right? What sort of impact does that have on the greater numbers? If you have Joe and Jane household that spends, and I'm just making up a number, $2,000 a year in a disposable way, right? To just non-essentials, or 5,000 a year is maybe a more practical number, totally non-essentials, so on and so forth. If that number doesn't move or just even decelerates slightly, because they've generally been in the shit for the last 2, 3, 4 years since that last stimulus sort of wore off, summer of 22, right? On a family by family basis, right? That $5,000 in discretionary spending doesn't move the needle. It does in aggregate, but on an individual basis doesn't move the needle. Well, if you have, call it 2% of the population that's spending, $300,000 a year on a discretionary basis, albeit only 2% of the population, and that goes away, right? That has a significant impact on this data. So I think it'll remain to be seen, but I think it's really something to keep an eye on. And it's going to be interesting to see how that plays out. So bonds have turned decidedly positive here on this number. And I say decidedly. We're up 2, 3, 4 ticks, right? 10s are at 436. Let's see where stock futures are before we sign up. If you have any questions, please post them in the chat. Come on. Yeah, kind of, maybe just up a bit more than where they were, right? But kind of in line with before the number. PCE final. Let me just pull up the PCE report. That's just too much to get. All right, let me just see if there's anything said in the current release that might be noteworthy. Yeah, food services was big. Clothing, not so much. Gas was a big driver. Non-durable healthcare, big driver. Real PC increased by $43 billion in May from the preceding month. PC increased by current dollar personal income 0.7. While improvements in concurrent production, no. Technical notes. The May increase of 180 billion in personal income primarily reflected increases in farm proprietors' income and comp. Reflected an increase in payments from the American Relief Act in 25. So that's interesting. I got to dive into that a little bit. Revisions to personal income. Okay, so yeah, there might be something there to take a look at. Long story short, on a data basis, we don't have anything at 8:30 tomorrow. You're going to have Michigan sentiment at 10. We've got a bunch of Fed speak this afternoon, and then again tomorrow. Although it's the same folks just a couple of times. Next week, a nothing burger on Monday, Jolts on Tuesday, and that's one to keep an eye on. Wednesday, ISM and ADP, and Thursday, non-farm. So here's the question, right? We're at a point where, and we've got to a 99 handle on fives, right? So to me, unless you want to take risk into those numbers, we are in full-on lock territory down in coupon. You'd have to revisit April, and we're about 3/4 of a point worse than April numbers. We are, and we only touch these numbers middle end of May, but we are well over 100 basis points better than the absolute bottom. We're about 100 basis points better than that sort of sustained bottom. And we clearly exhibited support, somewhere in the vicinity of, 98 and change. If you really want to hold your breath to February 27th, we've got 150 basis points still to run on fives. I just don't see it, right? 5.5s at par 21 on the screen. Again, on an absolute kind of 1-2 day basis, we're 100 basis points better than absolute bottom. We're more like 30-35 basis points better than support. And, we're only about 30 basis points worse than resistance. So to me, really across the stack here today, maybe not 6.5 coupon, i.e. 6 3/4 and above. I don't know why you're not locking. I think it's a full-on lock day here today. I think that you're 100% on loans closing in the next 2 weeks. And I think you're darn near. Listen, I know that I'm talking about things getting better starting in July. Starting, right? Starting means choppy. Starting means there's risk. By the way, I was just trying to wind down to sign off, but a couple people joined, but then they got off, so I don't know. But to me, I just, while I'm not going to sit here and tell you that these are going to be the best levels that we're going to see between now and July 30th, in terms of hedging, right? And that's what you're doing on a loan level basis if you're an originator. I don't see it. I don't know why you wouldn't lock in your July closings right here. And if the market gets a little bit better, so be it. I think worst case scenario, you are day to day and don't chase a loser, right? So could one make the argument, well, hey, I'm playing with house money, right? And I did float, where are we? If you floated those 5 1/4s, as we discussed yesterday, I mean, heck, you're up over 50 basis points, right? So, could I see, a scenario and cool. Thanks, Aletta. Could I see a scenario where you say, hey, look, I'm willing to gamble with 3-4 ticks and just hope that the market, doesn't take a dump and get away from me? Yeah, I don't So if you're going to take on risk, and let's be clear about this, right? I don't mind calculated risk. I don't mind you keeping an eye on the market and saying, hey, the moment I see it going the other way, I'm going to lock, right? I think that that's your worst case scenario, is take it hour by hour, day by day, and the moment that you give back some of the gain, you can't sweat it, lock it. You're ahead of the game. Bulls and bears make money. Pigs get slaughtered. I don't think that's a terrible idea because, not to contradict myself, because again, longer run, I'm more bullish. Longer run, if oil is here now, where is it likely going to be? Understanding the motivation of our president. But in the shorter run, you have that little nuisance of data. And that data is going to be noisy. And that's how I see it. Because as I just said a minute ago, because bulls and bears make money, pigs get slaughtered. Thanks for joining live. Thanks for watching on replay. And you know what I would say, Jenna, is why don't we do, let me think about it. We might do 10 o'clock. Here's the thing. Michigan sentiment's not really a headline number. So we may do 10 tomorrow. We'll post it and let you know where we're going to be. Thanks a lot, everybody.